Good morning and welcome to Learn to Trade live and free with me, Ash, and Jeff as well. Jeff's in the room. How you doing, buddy?
G'day, mate. Yeah, going okay. Nice and
Okie
fresh.
dokie. Nice and fresh. Well, that's unusual after 3 bottles of wine, but
Yeah, well, they'll have to wait for a little bit longer.
okay, so that is why we are fresh. We haven't started the wine yet.
No, not yet.
Okay.
Oh, it's Thursday, isn't it? Yeah,
It's Thursday, mate. Yeah, you can
that'll
get
be on
obliterated tonight.
I don't know about that. Give me a hard time,
Good
mate.
morning, Helen. Right, so we are short on the euro. We took a trade yesterday in the euro dollar, and we are
Good
short
job.
on that one. What's that, buddy?
I said good job.
Yeah. It's going well, mate. And you know, so far the price action on the dollar index is working well. Yeah. I won't get too excited, Helen. It was not exactly as I'd hoped. I wanted it just a little bit high. You know, I was getting in here because I didn't want to miss the trade, but I really wanted it up here for another bite at the cherry, and that just didn't happen. Even kind of coming down to the top of line would have been all right, but didn't happen. No big deal. And we are.
I wasted my time giving you a breakout trade then. You were already in.
Well, yes, and to be quite honest, I totally forgot as well. So,
well, as it turned out, they shouldn't have taken it anyway because it was too close to the.
Oh, good.
Too close to the entry.
Oh, good. Okay. Actually, it was funny. Why do you take the second? Why? Then TM wiped out. Why you take the second trade? I didn't get it. Oh, I didn't get the second trade, Helen. I wanted it. Do you know? But my thesis on it was that that the euro was the dollar index was going to strengthen. So with the dollar index looking to strengthen, then I was going to be short on whatever I could get a decent setup on, and I quite liked the euro setup. But I was okay on gold. You know, I was saying yesterday that I was a little bit I was less committal on gold, but I still thought that gold would come down. Good morning, Sino. Good morning, Swee. I was obviously I'm heavily committed to Bitcoin, which I can't show you on this this particular platform, but I am short on Bitcoin on my other accounts, and so far, actually, the Bitcoin trade isn't going quite as well to just yet. But let me show you Bitcoin, because I'll show you my other account, because I'm going to try and do the same thing with Bitcoin, or I will be doing the same thing with Bitcoin, where I'm adding positions. Oh, sorry, mate. Let's get to the dollar breakout first. Let's get to the pound breakout. Yeah, and then we'll talk about Bitcoin in a second.
Righto. I don't know how that would have gone yesterday because I was not in front of the charts. All right, we've got 2 minutes to go. I can't really put the long order in yet because we are near enough to the high of that bar. It will be 129.64 if the high doesn't get taken out. But you can put the short in if you want, and I'll do that. I can't do that because I've got that box open. Now I'll go and do it. We're in a few trades, mate. My little group, managed to get in a few trades.
Oh, brilliant, mate. That's really good.
I think actually most of the guys in here were privy to that anyway, because I've been kind of shouting them out for a while.
Yeah.
2909. The old Three Little Indians have done their job pretty much. Stop loss is 129.26. And that one's good. What do you think of the Fed statement, mate?
do you know, Matt? I thought it was very measured by Jerome Powell and fairly damp. I thought it was a bit of a damp squib in the end. I didn't think.
Yeah, I said benign, but
Yeah,
the,
very but incredibly benign. This is why, interestingly, I think we get a boost in the dollar because I wonder whether the price action that's driven us down to where we are has priced in. Uh, I think probably I think it's overshot what they expected the Fed to continue to do. Even though I think the dollar is certainly a selling opportunity in the long run because it's still, you know, they're still buying 1.2 billion worth of assets every month, and interest rates are incredibly low. I still think it comes down. I don't think it's at fair value, so I think we probably we're likely to get a rally in the dollar, and hence why I want to short you know, the likes of Bitcoin and the euro. So I'm just waiting for really the dollar to pop itself back up again, and then I'll switch positions and I'll be looking for longs in everything, you know, rather than going short. But Nasdaq got a bit of a caning off the back of it, and yeah, do you know, it's one of those things that I think maybe the market was hoping for more stimulus, but you know, for extra stimulus, but it's got to come to an end eventually. You know, there's not this this never-ending pool of money that well, I suppose there is in a way, but they can't continue to do that because the competitive nature of you know, any market cannot sustain itself by printing and printing and printing when everybody knows you're doing it. You know, it's not so bad if people don't know you're doing it. If other countries didn't know the US were doing it, it would mean that the US could then go out with a dollar at a half decent price and go and buy some assets for free, effectively for free money. But everybody knows they're at it, so it just doesn't work. So well,
they've been at it for a long, long time. As I keep saying, they're the world champions.
They're the world champs, mate. Yeah,
yeah. And it just cannot sustain itself. Of course it can't. I mean, it's common sense. And I'm no economist by any stretch. And I'm certainly not qualified to say this. But to me, it's absolutely, like, you know, as plain as the nose on your face that the dollar has to crash.
Yeah. Yeah, I think you're right, mate. I mean, but so what do we think about this then today? Because we got this this pound dollar, obviously we're putting on here, but we got we got the Bank of England. Yeah. Have you put that trade on now?
Yeah, it's on. Yeah.
Yeah, it's on.
So we give you numbers to those who can't see the screen properly.
Yeah.
The sell's at 1.2909 and the stop loss is at 1.2926. TP1 is at 2901, so very tight, and TP2 is at 1.2875. When you take first profit on this particular way of trading this, we put half in the bank and we move our stops the same distance between sell and TP1 to the other side. So in other words, we move our stop loss down to 129, what is it, 8 pips, 129.18. That's not right. 129.17, sorry. And therefore you're in a free trade situation. For the long, the entry level is at 1.2965, stop loss is at 1.2921, and TP1 is at TP1, hang on, 1.29. Why haven't I got that there? Because I didn't work it out. The difference is 43 pips, and therefore we're looking at 21 pips. So 21 pips above there would be 85. 1.2985 will be 2P1. TP2 will be double the risk. So again, that was 43 pips, so it'll be 86 pips. Add that to there, it'll be 1.3050. 1.3050 will be TP2 on the long. Okay, now, sorry, back to the analysis on this, mate. What do I think about it? I think it's going down.
What's that? The dollar? The pound.
Pound. Yep.
You know, you were missing a one number.
A one number. TP2, TP11, 1111.
What do you mean, Helen, by that? So I'm a bit lost on what you mean by missing a one number.
Me too.
Explain that to me, Helen. I very likely did, but I don't really.
Oh, you're missing a number.
My right. Oh, I didn't write anything up. Oh, is that you, Jeff?
No, I haven't put out a trade call.
You talking about this one here? You talking about the one on the screen, Helen? Because this is Jeff's screen, hopefully. Yeah, this is Jeff's screen. Buy one.
Oh, okay. Aussie, my Aussie. I've got an Aussie Swissy.
On yesterday's numbers 1.18. Oh, I see.
Euro, US dollar. Oh, that's you then.
That's me. Okay. Yeah. Do you know what? Yeah, I can't even remember what I had for breakfast. Never mind yesterday. But I don't know. I probably did miss a one number. Hopefully, it didn't confuse people too much. It was me. Yeah, it probably was Helen. I definitely need somebody alongside me to kind of make sure that I'm doing things in the right way, but half the time. But did you miss that trade, or were you not really interested in the trade anyway? But does that mean the trade was missed? I put in a wrong number, did I? Good morning, Lewis. I hope because I remember saying that I was going in at the daily pivot, so hopefully everybody kind of understood that if I did miss a number, you figured it out. Okay. I see. Okay. All right. Okay. Well, let me show you about the stop loss for future reference, because are you done for the now, mate? Oh, just one thing. One thing on this, mate. Good morning, LT. Just one thing on this, mate. With a trade like this, obviously we are trading, a breakout trade, and there is pound. There's a big pound bit of data later on. We got the official bank rates released later on.
Yep.
Does this affect the trade at this particular time? I mean, would you put an extra note in the journal and say, this has happened today, and it diminishes the probability of winning, or is it just not a factor?
It's a great question, but the answer is escaping because I haven't thought about it. Okay. I would have to, you would have to put a journal entry in there that says exactly that, because you can't trade into or out of a news event without notating that, because you're getting a skewed number. It won't work that way. Yeah, you can't get an accurate picture unless you understand that there's been a news event.
Right. Yeah.
So absolutely. Yeah. I didn't have to think too long.
Okay, so I'm just going to show you then. Let me just show you, show everybody Bitcoin then, and hopefully this will explain it. What I'm attempting to do with a stop loss, a little bit more.
I'll have a look at that Sino in a tick.
So Bitcoin. So I'm slowly kind of like getting my way into Bitcoin. Now, what I really want with Bitcoin is, my first trades were at the low point there, but I've added again because we are at. Let me see if I can get. No, I can't.
Oh, that's a nice retest of a neckline break there, buddy.
Almost, mate. Almost. But you see, not quite there. So the way that I'm looking at this is that that if price comes up to this point, I'm still scaling in. Now that means I have to go in light here. I didn't want this trade today, I've got to be honest, but I'm starting to see this potentially turn. So I'm having to scale in a bit more here, which my next scaling point is really here at 11.20, 11.250. Yeah, that's what I really want, and I'll go in a bit heavier there. But at this point, I've had to take another position because when I look at this on the daily, on the hourly, sorry. what I'm starting to get is a potential turn. Now that means that I have to go in light on each position, which is not a problem. Now this is the point I would have really liked to get in on up here, but that was at 1 o'clock this morning my time, and I was asleep. So as prices come up, I've taken the trade there instead, looking for a potential head and shoulders. You know, maybe that's what happens. But if price continues to the upside, and in some ways that's what I want, because my thesis is this is coming down, so I don't mind if it goes beyond my price points here, because I think it's going to go through them eventually. But I've got to make sure that my stop is measured, and it is but still close enough to make money, but far enough away to keep me safe. So that means that, you know, if I put a stop up, let's say I put it right up at the highs. Now that's a long way between this point and this point. But if I'm scaling in here, that becomes a less, you know, that journey becomes a little bit less. And then finally, if I scale in here, then I've got a really nice tight one. And I can put the most on my trade up at the high point because it's costing me the least. But this one will make the most if it comes down. So I go in light, bit heavier, and a bit heavier, with an ultimate stop loss of the whole position up here. So that's what I was doing. You know, the same thing with the euro. You know, with the euro, what I was looking at doing is having a really high stop loss. So my stop loss was right the way up here, because I wanted to add here. That's my hard stop, but I wanted to add. So I wanted to add to the position there, and I might still get, you know, do that. And actually, if price starts to come up, and you know, I've put my stop loss at break even now. But if it comes up to that point there, no big deal, takes me out, then hopefully I'll get into the position here. But what I'll do is I'll go in a bit heavier the second time round, because what I haven't had the opportunity to do is build into the position. I've only got one on right now. But what I will do is, if it starts to move down, let's take these lines away just so we can sort of see a bit of a cleaner chart as well. And get rid of that as well. What I will do is, if price does start to come down, then I'll add on the way down instead. Now, if you add on the way down, the amount you add is going to be different. You know, it's not going to be quite as safe in some respects, unless you can get a nice point to get a, you know, I could add here with a stop loss at that point there, but I don't think it's come down far enough just yet, because what I really want is it to break this pattern. I want it to break the pattern down. And let's see what happens by the end of the day. And if it's still holding the pattern by the end of the day, then the trade isn't ready. But this is starting to look distinctly, and if you look at a dollar index chart, this is starting to look distinctly like a complex head and shoulders pattern, where I've got you know, my double bounce here. And this is what makes it complex, is that you get two peaks in each area. So I've got the complex is there. There's one peak there and another peak there, making up my right shoulder, my left shoulder. There's one peak there and another peak there, making up my head. Now there's only one peak here, so I wonder whether we do need to go up one more time and then come down. But I wanted to get the position on, just you know, just in case it is coming down. So I'll leave it on, and if I get stopped out, I'm not too worried about it. But I want to try and get, you know, I might have to go in a bit heavier this you know, next time around here. But it probably will mean that stops won't be up there, because I won't anticipate you know, too much higher than that point there on the second time. So I'm treating it differently depending on what the chart is telling me. You know, I can't say to the market, this is how I'm going to trade. I've got to say, right, what have you got on offer, and then I will have to trade around it.
Funny thing, that, isn't it? Doesn't give us any head start at all. It just says, no, you come to me, buddy. And we're saying,
yeah, exactly.
No,
exactly.
You come to me. It's like a tug of war, isn't it?
Yeah, it is. So I'm sort of now I'm waiting, as I say, for Bitcoin to behave. But you know, and Bitcoin, it's strange how Bitcoin, it's peculiar how Bitcoin hasn't reacted in quite the same way. It's a bit more resilient, which in a way, as I say, is quite good, because it might mean that I get the price that I really want, which is at the 11,250. Now look at what's happened because of it with silver. You know, had a decent run to the downside from its highs, and again, look at the chart pattern here. You know, if we forget this area over here, we forget this whole thing over here. No, don't forget it. But if we omit it from the potential pattern that we've got going on, then look what we've got. You know, the evidence appears to me to be stacking up for some downside. Now, I don't think this is going to come down necessarily very far, but it might give us at least a drop of, I don't know, maybe at least to this point here, we might get on silver, possibly. You know, the measured move is not going to be great. Might not even be that pattern that we are trading. But what it is suggesting is that there is certainly some distribution going on here, and that's all a head and shoulders pattern is. It's distributing from smart money to weak money. And it doesn't mean that we are necessarily just going to play out the pattern and be done. But it is suggesting that there are people. You know, there are people that look like they have been getting out of positions in all these particular spots here, and then, you know, we might well see a proper downdraft. And again, you know, I want silver long, you know, just like I want the dollar short, and I'd like to aim down here somewhere. Now that doesn't mean that I'm trading silver short, but I will look for this one to come down, so I can hop in on the to the upside. Same thing happened with gold, and we got, you know, the different pattern here. We've all been talking about this this triangle pattern, and how this needs to break down. Again, maybe it's just too early, but this is in a sell zone up here. As far as I'm aware, there's lots of pivots, so it might be, yeah, it's kind of jammed in with some of the pivots up here. But if the dollar is to strengthen, then all of these markets will fall. And we have seen the Nasdaq. Now, there was a question about the Nasdaq. Why is the Nasdaq fallen? And again, I really like the Nasdaq for some downside, but I haven't traded it, because what I'd really like to do is pick it up long, and I didn't want to be overexposed to the dollar. You know, so to my mind, we've got Nasdaq shorts. We've got gold shorts, we've got Bitcoin short, we've got the euro short, but really it's a dollar. It's about the dollar, and that means that if I trade the Nasdaq as well, then I'm starting to get a bit overexposed to dollar movements. But I'm looking for downside. So why did the Nasdaq fail in a way that the Dow hasn't, or the S&P hasn't? And there's two reasons. You know, in some respects it has, but it hasn't had quite the same move. But you can see the same kind of thing is going on with the S&P, where it has so far, maybe it hasn't broken down the trend line. The Nasdaq seems to be through. So there's a few reasons that the Nasdaq, when prices come down, will be affected. Firstly, at this particular stage, if you think about the move in the Nasdaq, anything that does that in comparison to that will do that in comparison to that on the way down. You know, when something look at Tesla, for example, if it increases in value from this point to this point, then the likelihood is when it decreases, the volatility is going to be high, because there's going to be a lot of nervous people up here thinking, geez, I've made 100% on this trade, so let's get out. And these guys are made 80, these guys are made 70, these are made 60, these are made 50. So it's just going to start to fall very, very quickly. Whereas with the S&P, in actual fact, that's not quite as where it should be, should it? With the S&P, you know, it hasn't been, the move to the upside hasn't been as vicious. So really, kind of like by logic, it won't be quite as bad when it comes down, because, you know, people would have only made 20% here, so they're much more likely to hold on to positions. That's one of the reasons. Another one of the reasons is the S&P is smoothed, because with the 500 stocks, over, or is it 501? I can't remember. I don't think it is exactly 500, but it's either 501 or 499. I can't remember. But with 500 stocks versus 30, then we would expect a smoothing of the stocks that are going to the upside versus the ones that are going to the downside over these ones, which will have the likes of Amazon and Facebook and Microsoft and Apple, and who else is there? Google. So because of these, if these start to come down, even though they are only 5 stocks out of 30, it's going to drag the whole index down heavily because these are the big players. And what I mean by that is that they've got a market cap which engulfs all the other 25 by some. So I believe Amazon was struggling a bit yesterday, so that's going to start coming down. And you'll see the same thing going up. You know, the move that we've had to the upside in the Nasdaq has not been particularly equal. You know, the kind of the big players have really dragged the index up. So inevitably, one little kind of blip in one of those earnings or something like that is going to drag the index down, you know, in a much heavier way. So that's a couple of reasons that you'll see the Nasdaq move much more viciously than the likes of the S&P. Now, you know, you could argue then, well, what about the Dow? You know, the Dow's only got 30 stocks in it, and that is true, except for the fact that the Dow, the way you get on the Dow is completely different to the way that you kind of get on the Nasdaq and the S&P. Now, because it's the industrial average, it's exposed slightly different. So that's industrial, and obviously the Nasdaq is tech. So it's exposed slightly different to the different markets components that kind of are going to drag it one way or the other. So you will see them you know, move in different ways because they have a different basket of stocks on their indice. But in saying that, now the Dow looks to me like it is topping out here as well. And as I said to Jeff beforehand, I wonder whether what we've seen is the anticipation with the dollar of further easing, you know, because of what we've seen with Jerome Powell, and I wonder whether the market slightly overshot the you know, what the actual value of the dollar probably should be, because they just haven't expected that that stimulus to continue, and it is, you know, that the stimulus is continuing, but it's just they're not adding to it. You know, they're kind of sticking to their 1.1 billion, 1.2 billion asset purchases every month. But look at the dollar now. I mean, it's, you know, we know about this chart. We know about the pattern we've been looking at for a long time, and no different to the euro, in as much that we are seeing the same thing. We've got the inverted head and shoulders, complex inverted head and shoulders down here, where we've got our multiple tests of a left shoulder, multiple tests of a head. I'm not sure if we've had that multiple test of the right shoulder. We may have. You can usually do it by counting how many bars are over here versus how many bars are over here, and that will give you some kind of equal balance between the right shoulder and the left shoulder. But if we haven't had it yet, we might come down one more time and then pop. But I don't expect much more than 94.50. I think there's a chance we could go higher than that, but I'm going to watch out for 94.50 just in case. But let's count the bars here. You got let's get rid of that one just for right now. But we've got 1, 2, 3, 4, 5, 6, 7, 8, 9. Probably 9 make up that right shoulder there. Sorry, the left shoulder. And here we got maybe 1, 2, 3, 4, 5, 6. There's 7 there. So it would suggest at this stage that there might be a couple more days. It might not be until Monday that we really see this one pop up. But it could be any time between now and Monday. And we got enough balance there to suggest that the right shoulder will be complete. Now, it doesn't have to do this just because we've seen it with the head and the left shoulder. It doesn't have to have two drops, but it may. You know, it may. that one there might be counted as a drop, and maybe we've had the other one there. I don't know. But we're certainly, I'm certainly looking for some dollar strength here, and that puts me in the camp of looking for weakness everywhere else. So what else we got here? Oh, another possible sing shot on the euro and Aussie hour one for long time to the weekly pivot. I'll leave you with that one, mate. No problem, Helen. The techs have had enough. Yeah, they do. The small businesses do need more help, and the other thing that we've got to consider always is that we've got the US election. So forgetting everything else that we've got kind of coming out. If you look at the seasonal aspect of the dollar index, what happens to the dollar? It tends to rise mid-September. Right through until October, then we get another dip, and then we start to really take off to the upside, to going towards the end of the year. So we are at the right seasonal time for some upside, and we know we've analysed the chart, 1,000 times, and I've told myself 1,000 times, don't exaggerate. We've analysed the chart many times, and we've seen that. That the monthly, we're right on a primary trend line here. We're starting to see that reversal pattern. So we are expecting some upside at least until the end of September. So that's what I'm looking for. Right then, mate. So do you want to have a look at this this euro?
There's a couple of things to look at, mate.
Yeah.
Pound and the euro Aussie. Yep.
Yes, the pound. Pound's going to be interesting today, isn't it? I mean, I don't know. I don't think we got too much expectation with the Bank of England. I feel for them. They're in a sticky position. They don't know what's going on with Brexit. Joe Biden's come out and said the UK government cannot jeopardize the Good Friday Agreement, and a trade deal just won't be acceptable. And this is interesting, isn't it? Because if it goes from Biden to Trump, Boris Johnson's position is completely different. Whereas he could have done a deal, I think, with Trump quite happily, because Trump doesn't mind shaking things up a bit. Joe Biden, I think, is going to be a lot more of a president who toes the line globally, and he won't be his head won't be turned.
I saw a funny thing with Joe Biden on one of our local TV stations. I'll try and get a excerpt of it, and I'll post it in. If I can get it, I'll post it in the US session tonight. Really funny, really good.
Oh, brilliant. I mean, I need something to go on, which is going to convince me he's not going to get in. I mean, I'm not 100% in his camp, but I would definitely be edging towards a Biden win right now.
Oh, look, I've got no idea, mate. Absolutely beyond me. It's way above my pay grade. But how can you rule Trump out? You just can't.
No. Well, this is why I'm only 55% Biden.
Yeah, exactly.
I'm going to give Trump a fair crack at the whip, but it's going to be a fascinating result, I think, one way or the other.
Okay, let's look at Euro Aussie. And speaking of fascinating, this is fascinating on the 30-minute chart, I've got to say, where we had this explosion out of the blocks. When was that? An hour or so ago? Just before UK Open, right? No, that would have been the Open of Europe. Brussels Opens, I think, at that time. Pardon me. So bang, big explosion. It wasn't in news at that time. Actually, I haven't had a look at Forex Factory. I should have. That's a bad thing to do. But as far as looking for a long here is concerned, I'm on board with it. But gee whiz, that this current bar is really telling me that there's something afoot, and I've got no idea what that is, frankly. Now, that said, we've got a beautiful little tweezer bottom, double bottom, call it what you want, sitting there at a substantial level, because we have been here before and price went straight into range after that. As you can see, we've tried to bust out of it again, and thus far have failed to go beyond this level. So that's the key level right there. And I'm totally on board with the long here. Yeah. I don't like the euro. and I'm not sure which one goes to the bottom first, frankly. I'm not a fan of the Aussie either. So makes it tough, but from a technical point of view, most definitely I can see your point, Sino. And to trade that right now, the only thing I can see is on the hourly chart. And the hourly chart is telling me put a buy order here. And if this would just stop for a minute, that'd be nice. Put a stop loss below it. So yeah, I get that, and I'd be on board with it. It's getting a bit long in the tooth, and the reason I say that is because of this bar here, not because of this bar, but because of this bar here. What we've got, cheers, mate. What we've got in my vocabulary or language or system point of view is an equal high here, and it's the high of the day. If this high was higher than that high, then I would have no hesitation in placing that trade. But because we've got a double high here, if you like, that really does give me a little bit of the heebie-jeebies. And the fact that we've got a 37 pip candle, Euro Aussie, that's not that bad, but generally I like to stay below 30. And we'd have to take profit there. It's not quite 1/3. So it's one of those do I, don't I type positions. I totally agree with the sentiment and the likelihood of this going back to the top of the range. Got it. And I do like the double bottom, and maybe we've got a higher low here. It's not significant, that's true, but yeah, I'm with you. Absolutely with you. The 4-hour chart may be worth waiting for, I'm not sure, but that's potentially going to give us a higher low as well in here somewhere. I like the double bottom. I really do. It's very, very good. And on the 30-minute chart and the 1-hour chart, I think that's probably tradable. So if you're prepared to take 40 pips of risk and take profit here, then okay, I'm with you. It's just a little bit tight for me, so I wouldn't be putting money on it myself. But I get it. The other one was pound US dollar. And like me, you're looking for short. And I can see a couple of opportunities here. That's the hourly chart. It's a little bit messy down this neck of the woods. Hang on, I've lost my mouse. There it is. It's a little bit messy down here, but I totally see what you're seeing. Low test, low test, low test, and even a little pullback, in fact, which has become a big pullback. That's the problem. Where do you put your stop loss? Entry's easy, but where do you put your stop loss? Do you put it where we've got our stop loss for the breakout trade? I'd like to see, from a strategic point of view, something a little bit better than that, to be honest. But I do understand what you're seeing. I've got a little bit of a concern about this area because we do have a base. We've got a higher high, a higher low, a higher high, higher low, higher high, higher low. It's not telling us it's turning around just yet. So it's really a bit of a punt to say that. And here's the way I deal with that. If you're going as a reversal, you need to see higher highs and higher lows. That's a given. Everyone understands that. But once you've started into that, from my point of view, you then need to see a break of that sequence. Now, that may well be a lower low and a lower high, and I get all that as well. But for me, the break of the sequence is a failed resistance break. So that would suit this scenario. If we got up to here, then came back underneath, in particular underneath the pivots, and retested the confluence area, then I'm confident that the next move is short. And the reason I say that is because these guys just failed, put in a lower high, and I'm of the belief that if that's to continue, then we're going to take out this low and put in a lower low. So that's the whole premise. So for that reason, I really would rather see the resistance break at this point. See the setup? Absolutely see it. But because we now have potentially reversed, and we have potentially reversed, I want to see that breakdown of resistance first. So false break of resistance is pretty much where I'm always looking in that particular circumstance. And that trend line there will give us exactly that scenario if it does play out. So hopefully that has answered your question, Sino. And I love that you're seeing what you're seeing, but there's a little bit more on it than that. FTSE for Ash when he comes back. Gosh, the techs have had enough. Fed help, small business. Okay,
I'm back, mate. I'm back.
Right, mate. Just quickly for those of you, and I've got no idea how many of you are in these trades that we're in currently, but certainly all my group should be. Dollar yen, 76. We've got about 4 pips to go before we take our first. But you guys should be in this, I would imagine, because I've been spruiking this all week and probably even last week, maybe even the week before. So you should be in that. TP1 is approaching, and that's going okay. Aussie Swiss not going so well, and I don't want to see that. I want to see something down here, obviously. So that's not going so great, but whilst ever we're in the vicinity of this range, I still feel confident that we'll come back to the bottom. If this was to break out to the high side, I may even consider closing it in a losing position, because that means it's turned around for me and it will take on these highs. We'll see. Sino with the retrade, I'll have a look at that in a tick as well. This was the trade of the week for mine, and I called that on Sunday. I thought it was the best trade available to us. Swissy yen short, trading this bar here. And that's turned out to be a cracker so far. We are about 100 pips into TP2. Yeah, you might want to consider taking a second profit, maybe even at DS2. That would make sense. Take a little bit more off the table there, I think, and move stops to entry. Always when I take TP2, I move stops to entry. So I think that's probably worthwhile thinking about on Swissy yen. We also got into Euro yen, and we need to get that to here to get the TP1. So we're about 34 pips away from that. Those of you who, you probably didn't get into this because I called this morning, I think, to my group, but there was a way to trade this, and it was exactly what you've been seeing. So I know a couple of low test bars sitting on the support trade line. But we also flagged this on Sunday as well. It was a choice, wasn't it? Which one are you going to take? And this was the same bar, exactly the same bar as we traded on Swissy yen, but Swissy yen had a bigger body, and that's why we chose Swissy yen over it. But absolutely, totally there. And guess what? Double top, lower high, happy days. They're the only ones I think we are in at the moment that you guys would be in anyway. Just having a scan there. Euro pound we're waiting to get into. Kiwi US dollar. I'll go to that tick. Euro pound. I'm still, of course, of the opinion that we can trade this one more time, and I need to see. That's the daily chart, of course. I need to see a retest of something, and the daily chart is the obvious one. So it's not one for today, but if we would close down here today and pull back here for tomorrow, that would be happy days. I also flagged Kiwi US dollar to my group this morning, and sadly, yesterday as well. This was going short in my humble opinion, and it didn't set up yesterday. And again, on the 4-hour chart, it didn't set up today. But on the hourly chart, it certainly did, as false break back, retest, enter there, get your money in the bank. And again, a double banger here, really, because it's set up slingshot wise for a second time on the support trade line. So false break of resistance and a breakout of support. Nice. Unfortunately, only on an hourly chart, so no good for me. I was waiting for the 4 hour and it just didn't come. Maybe this is the one that I was looking for up here, but yeah, it's too far gone. I can't trade that now. So let's go back to dollar yen and ask the question, can you get in on the retrace? Okay, you should have taken your profit now, guys. First TP, TP1 should be in the bank. We've now just gone through it. Wow, it's a great question, but I'm not a fan because it's a retrace to where and retesting what. That becomes the question. It's probably that area, which is realistically, I suppose, the breakout area. So I can get with that. And I do think it's going a fair way. So I've got no problem with the premise. But you need to keep your eye on this level here, which is pretty clear. We've already been through this level here, which is important. But this level here is also important because it's 1, 2, 3, 4 failures at that level. 104.45-ish, which is, you know, looming now. If you were to get a break of that level there, so let's take out these lows, then come back, I would agree with a trade into as a result of the retrace. But right now, I don't think so. And that's the reason. The reason is that level that I just pointed out. Even if it retraced here now, your reward to risk ratio is getting pretty poor because I think you're only trading to there before you get the first bounce, and that bounce could be deadly. So break that level, yes, then come back, I'm with you. But to get in now, I think is not the right thing. You've got to remember that we've got 1, 2, 3, potentially 4 big selling days in a row. That retrace could be as far as there once it hits that level. So yeah, it's a dodgy one. I don't want to say don't take it, but to me the reward to risk is obviously far less than it was before. How about Euro CAD? Have a look. Euro CAD, I missed that, did I? Probably. Oh, no, it doesn't look too bad. Doesn't look too bad. You can see the monthly pivots doing a heck of a job there, don't you? Or can't you? What is the question? We can wait for retracement to monthly pivot on 4-hour chart, Euro CAD. I think we've probably already had it now, Swee. Let me have a look. Yeah, I don't think we're going back to the monthly pivot, frankly, if it's going short. And this might even be a good bar to trade, depends on how it closes. We've got, what, an hour and 20 minutes or so before this candle closes. I think I'll be okay with that, Swee. This bar needs to be a white one. And if it looked exactly as it does now, I think I'd be willing to trade it. And I'd be taking profit here. So your risk is going to be, let's say, 33 pips. You'd be taking profit at about 20 pips. So that would be perfectly okay. I think I'd be willing to do that. You could also consider, if you want to be a little bit safer, you could consider trading this bar here. Entry underneath, stop loss above. I think there's definitely worse ones to take. Your take profit level for that should be about there. So the risk to reward on that ain't going to be fantastic. 28 pips of reward for, say, 65. It's not too bad. Not too bad. Yeah, I'd be okay with that. So, yep. If you want to take that one, take it. I'd be interested in that bar as it closes in around about, as I say, an hour and 20 minutes. Half risk on H1. H1 with this bar, trading that bar, or trading one of these bars. Either way. I don't trust H1s with these, what I call potential reversal bars, as much as I do on the 4 hour. Let me have a look at the 30. Yeah, because you can see what's happening here. What's happening here is we're now pivot bound because these guys have really not gone through with the job. They should have got back into the market after that retracement, in my humble opinion. And they tried, but they failed. And now we're pivot bound. So I'm not sure what happens next from a 30-minute or 60-minute point of view. But the 4 hour is completely different because this has not got a lot of noise involved in it. It's a clear going long there, going short there for me. So I don't get the noise on the 1 hour or the 30-minute chart because it's up and down like father's pants, as I say all the time. So I'd be steering clear of that. But if you want to go short underneath these, then I get that. But again, you'd want to be taking profit quickly, either at DS1 or at that low there. So that would be the way I look at it. And I hope that helps. Pound Kiwi. Oh, Lord, don't remind me about Pound Kiwi. We had to suffer all that retracement or reversal last week and the week before even. I haven't even got on my chart. Let's, yes, I think that's the way to go. Pound Kiwi, there we go. Do I want to get back into it? Yes, I do. Is this the right time? Maybe not. Yeah, I like the potential for the bounce off the weekly pivot and to go long. But I think I need a clear, just like I said, a clear signal. And right now I don't have a clear signal. I'm looking for a reversal bar or something off the daily pivot, maybe. Something that looks maybe like that, something like that, or something like that, or like that. A long tail candle off the daily pivot that is black, that would be perfect. But it's got to get down there. Obviously, it may not. Like the base, but I've got to have that lower high, that higher low. And the higher low off the daily pivot would be perfect. It could break this trade line, come back to the monthly pivot and give us a higher low. That would also be perfect. But right now, let me have a look at the smaller time frames. Double cross of the weekly pivot. Problem? Does anyone see a problem with that? And you know I love to trade double crosses of the weekly pivot. And the first one at that. Does anyone see a problem with that? I'll just wait a minute or so till we get an answer. Some of my group should see a problem with that. Why wouldn't I go long right now? Got a lovely little setup. Haven't quite got the 3 bars or the 3 tests that I want. Maybe I have. on the trade line. Potential ABC coming up here. Why wouldn't I go long right now? Stumped you. Okay. 2 letters, 1 number. There's a hint. 2 letters, 1 number. Yep.
I got it.
Ash has got it. Okay. Time's up. Aha. LT's onto it, except he's got his letter wrong, but he's exactly right. Yes, Brian, perfect. Absolutely perfect. I ain't going beyond DR2. So I don't expect the market will go beyond DR2 and stay there today. It may tomorrow, it may the next day, but intraday, I don't expect the market's going to go through DR2 and keep going. So I would not be looking to risk, in this case, probably 75 pips to get 9. That doesn't make any sense to me at all. So that's why I wouldn't be trading that. But, let me add to that. There's probably another reason. Since we opened this morning, we've gone 160 pips. And that's why DR2 is pertinent, right? ATR of pound Kiwi is probably not far from there, but let's find out. I'm not on the daily chart, so that's not going to work. Daily charts, inserts, indicators. ATR, let's go back 20 days, why not? And it's about 158, so we're pretty much bang on it, right? Pretty much bang on the ATR. So there's good enough reason, even without DR2 being in the way. But you're going to find that it would be on most occasions with the range, the average true range being met. Not a good plan. You're asking the market to do something it doesn't normally do, and that's go outside the ATR. I'm not saying it can't, but the odds are definitely against it. And that said, you've got to be thinking that this bar here is going to attract a fair bit of attention from sellers, given that we're in a downtrend and we've got to bounce off the weekly pivot with a seller bar. So to go long here doesn't make any sense to me at all. None, zilch, zero. But come back to here somewhere and give us the higher low, then we've got that room to go back to. Then I get it, but not before. Hope that helps. So where are we at? How you doing, mate?
Yeah, doing well, mate. Doing well.
Have you got anything?
Nothing to trade. No, you know what? It's one of those that positions are, I think, at this stage in and riding. You know, this is kind of management zone now. Positions should be in the market, and there should be some management going on. Not interest. The Nasdaq is of interest, and the S&P is of interest. I would question it going through at this particular stage, but it doesn't mean I really want to go long. You know, I want them all lower. So I'm waiting for a genuine breakdown. All we're really doing is just coming off some highs at the minute, but there hasn't really been a real move, is it? And actually, you know, this is the interesting thing about the Fed. You know, we talked about the Fed, we talked about Jerome Powell, and it being a little bit of a benign statement. And in many respects, we've seen a bit of a benign reaction. You know, yes, the Nasdaq is down around about 5% from its highs, but that's kind of how it moves. But all it's doing is kind of like getting itself into a nice big broad range of price action and not really going anywhere. So
I guess it depends where you look, isn't it? I think the currencies which have been bound up, you know, and they've been coiling up, have to some degree broken out of their ranges.
Yeah, I mean, which ones are you looking at for that?
Well, look at dollar yen. Look at
yeah.
Look at what else? Look at Swiss yen, or Swiss yen wasn't in a range. Look at the Euro pairs, the Aussie pairs.
Yeah, yeah,
Not quite.
and I guess they're not. It's the ones that aren't so much related to the dollar. I mean, the euro is just about holding pat right now, and it might even be that we're waiting for the Bank of England. Finally, it's difficult
Could
to know
be.
what's going to be the driver that's actually going to break the pattern, because it's got to break at some point, one way or the other. But what's going to be the driver? Maybe people are waiting for some slip up in the US election. Maybe they're waiting for more information in the US election. Maybe they're waiting for the UK to move. I don't know, but the reports that I'm reading actually about the stimulus possibly from the UK is that the Bank of England might even be getting ready for gearing up for another stimulus push. So we might actually see the pound actually lower by the close of trade today. It's let me just see what the report says. The Bank of England is expected to signal on Thursday that it is getting ready to pump yet more stimulus into Britain economy as it heads for a jump in unemployment and a possible Brexit shock. So it looks like they may intimate that, which won't be too good for the pound. But
I'm going to say that doesn't sound pound bullish, does it?
no, it doesn't. It doesn't. And I'm, I think the pound is quite interesting because from what I was reading, there were a great number of hedge funds. The majority of hedge funds that were actually bullish on the pound before this big U-turn by the UK government about breaking international law. And I think it's caught everybody a little bit on the hop. So, I wonder what the move, from the pound will be from this particular point. I wonder whether we do go genuinely lower, or we just come back down to test the lows, and then, there's a little bit more wait and see that goes on, and we could actually push again from here. It depends what the Bank of England say, but I think we're going to be watching that with bated breath, and it might be because it is a fairly substantial, when it comes down to the whole market, it's not hugely substantial, but it's a fairly substantial event. Any national bank making any statement. So it's possible that we're waiting on that. Now there is, somebody asked about my opinion of the FTSE, which I will maybe take the chart on it and just talk about it because actually obviously the FTSE is going to also move on that statement. So I wouldn't be trading the FTSE before the Bank of England come out either at this particular stage. So hold on 1 second. Let me just get this one ready. There we go. Right.
Swissy H1. I'll have a look at that when you're done, mate.
Yeah, good stuff. Okay. So UK 100s. I mean, you can see it's just in a range, isn't it? It really isn't going anywhere. But if there is stimulus to come from the Bank of England, then the chances are the FTSE goes higher from here. And actually, I'm not too bearish on the FTSE. I'm a bit more bearish on the US market right now. But when it comes down to the FTSE 100. I think there's a fairly good chance that the FTSE at least holds where it currently is, and potentially even goes a little bit higher from this particular point as well. So I think there's a few things that we need to watch out for with the price action with the FTSE, and not get kind of like too drawn into the rest of the market coming down and seeing this coming down at the same time. This at this particular stage looks like an evening star. That looks like it's forming on a high, which is where we need to see it. And just to kind of reiterate, I'm sure everybody knows the evening star by now, but the evening star is a 3-candle pattern where you will get a push to the upside, and you will get it doesn't matter of the color of the next bar. So actually, let's do it blank and do it white, because it really doesn't matter on the color of that one. And it can be anything, it could be a doji, it could be a high test bar or anything like that. As long as it's got a small body, then we can treat it like a classic evening star. And then the final one starts to come down like that. Let me just do that properly. final part of the evening star starts to come down. So it's a 3-bar pattern, and you can kind of see that forming potentially here. Whoops. You can kind of see it forming potentially here. Let me just do that one more time. Here, that looks like it could turn into an evening star, but there is a what I call a false dawn and a false dusk, and this kind of almost turns into that. Rather it being an evening star, what actually might end up happening here is that we get a bar which suggests that the 3rd bar isn't going to go down, but actually what it does is gives us a small body, which we might have by the end of today, given what we've got coming out of the Bank of England, and then a tail, which is almost kind of almost like a test of a low. It's testing this area down here, it's testing the breakout point down there and rejecting it. If it ends up above the monthly pivot, so it ends up kind of like closing up there, that's going to look a lot more positive for the FTSE 100. Now we are getting very, very close. We're probably too close in many respects to try and trade it from this point to this point up here. So I don't think I'd be that keen on trying to take a trade in that area, but I wouldn't mind seeing if it did manage to break out, then taking it. And then we can just let the chart do the work for us. Because if we are anticipating that the FTSE could well strengthen after the news event, and it might be that we don't get this particular bar here. What we might get instead is a bar that does this, which is would be a breakout. All's calm on the Western Front right now, but instead of that, maybe we get something like that instead. And actually the FTSE breaks to the upside today. And if it does that, obviously, when it comes down to tomorrow and Monday, we will be looking for further moves to the upside, from this particular point. So I'm not particularly committed to the FTSE in either direction at this particular stage. If anything, if we get a booster in equities across the board, then I probably would prefer the FTSE. Let me just see if that trend line. See, that trend line would suggest that the weekly pivot could do with being tested, and if the weekly pivot was tested, that would be a completely different story for me. I'd be quite happy to try and take a long in that particular position, but my overall kind of view on the FTSE is a little bit is flat to up, rather than what I'm seeing with the US equity. So I'll be quite happy to try and take a FTSE trade at this particular point, but I'm not particularly committed. 59.54. So it could do with another drop of maybe another 1.5% to the downside before I got interested in the longs, unless we get a break. If we get the breakout, then I'll be more than happy to take it here. But we are in a bit of a sticky range. But you can see, look at this is a pretty good zone here. 59.54 is a pretty good area, and we got the weekly pivot there. I'll put a fib on it as well, just to kind of see what that looks like in regards to the move from high to low. It looks pretty good, doesn't it? That fib down there, the 50% retracement, is at 59.38. So we're going between 38 and 54 for some potential upside. So I'll be looking at the longs down here, but otherwise I'm not really that interested. The market's in a bit of a flat zone in some respects. Nothing we can trade. I've got a different feeling about the S&P. S&P I'd quite like to see lower. Probably the weekly pivot plays a part in this one as well. Maybe the S&P is some kind of area of resistance. My slight issue is that we've had the news and data from Jerome Powell, which is quite big, and there's not been a huge reaction at this particular point. So we could still be a little bit early. I think Shukri was talking about Larry Williams saying that the 17th, which is today, is the day that the market moves, is likely to move. So maybe we do see it today. I don't know, but I've got my positions in, and I'm going to be managing those positions rather than adding anything else at this particular stage, mate. But I do like if we were to hold here right across the board, I quite like the FTSE as the indice to trade long. If we break down, then we're really looking at the US in equities to trade on the short side. I wouldn't be wanting the FTSE on the short side. So it just depends on what what happens from here on in. What's going to be the reaction by the time the US market opens, and that's when we might see it. It really might be a case of a 1 day two different kind of price action movements. We might actually see the movement start to happen during the US session today, because the UK session isn't particularly exciting at this stage from what I can see, from what I'm looking at. I know you're saying about the other currencies, but from what I'm looking at with
the yen in particular, really, that's
yeah.
the one that's moved. And that's interesting. And I don't think it's dollar related, frankly. I think it's all to do with they've now got a new leader. Yeah. And I think they're just having a little bit of a, I don't know, holiday on that, perhaps.
Yeah, I think that's a really good point, and something that has been completely forgotten by me. Yeah, you're absolutely right. They do have their new leader, Sugar, is it? So I'm not sure how you pronounce it, but I think it's SUGA.
Yeah, I'm not sure.
That's how you spell it, but I think his name's Sugar. He is now in power, and yes, you're absolutely right. No big surprise to see the yen kind of getting some kickback, and Kiwi is a little bit lower against the yen. We've seen the dollar yen to the downside, so that would maybe. The pound is that's the weekly actually. Yeah, pound's quite flat against the yen, but it could be that we could be looking at pound shorts against the yen rather than the dollar at this stage.
Yeah, I think the yen's got good potential. We're taking advantage of that in 3 cases. We've got euro yen, Swissy yen, and dollar yen all short at the moment, and they're all going okay. So hopefully that continues, and we can bank some good profit.
Yeah. Julian calls it the ring high. Yes, exactly. Ring high is exactly the same as a evening star. No, the dollar, Alan, the dollar hasn't picked up, but I still wonder whether we could be a shade early. Now, it could be a session early, so it could be by later in the session we see some dollar strength, but it could be next week. Now, I'm still looking for dollar longs, just because it hasn't picked up on the event that I thought it would. It doesn't turn me away from the dollar. I still think that we're going to see a dollar pop. So I'm quite happy to hold on to positions and let them come against me a little bit, rather than closing out at this stage and waiting for a new opportunity. So, yeah, you're absolutely right. We've not seen the price action in the dollar that I was looking for, but we are, as I say, we might still be a little bit imbalanced on the pattern of the inverted head and shoulders. So until we get complete balance, then we can hold out. And what I mean by that, I'm not sure if you were in earlier on, but just so you can see what I mean by that. What I mean by
that. It's a rocky road, that dollar, at the moment.
Yeah, absolutely is. Yeah. But I was just counting these bars earlier on, Alan, and I'm not sure if you were in, so I will do it again. But, you've got possibly, this is 1 here. That's 1. We've got 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's between 11 and 12. So we got it might be less, but I think it depends on where it starts to come down. But this range here looks like about 11 bars. Now, if we're sort of like looking at from this point here as at the start of the right shoulder, then we've only got 1, 2, 3, 4, 5, 6, 7, 8 bars. So we might be 3 days early. We might be 2 days early. It might take off today. It's hard to know because we're getting close enough to say that there's almost enough balance between the left and right shoulder, but it's not quite there. So it might be a little bit early, but I'm not losing faith with this until we kind of move into the end of next week, possibly. Then I'm quite happy to continue to hold on to my positions, which are trading the dollar long, i.e. the euro and Bitcoin. And I'll continue to add to those positions. If they go up, I'll add to those positions because this is my belief. But you have to make sure that you understand what you're doing if you are going to add to positions as they go up, and you're still risking your same amount. I'm going to talk about it next week in the US show. I'm going to try and present something next Wednesday with Orlando. I think we were talking about maybe talking about how we add to positions, and that might be something that you want to get involved. Oh, actually, it's you next week, isn't it? Well,
Me
maybe
next
you'll be
week,
doing
buddy.
that. Maybe you'll be doing that instead.
Maybe I am. You'll have to school me up.
Yeah, well, it was just about talking about how we add to positions. You know, Orlando likes to add to a position as it goes.
Okay, scaling in, right? Yep.
Yeah, it's just the scaling. Yeah, so I was just going to do a little presentation.
We've each got different methods of doing that. I know Ainsley's got one. I know Orlando's got one. You've got one.
Yeah.
I haven't got a set one. I just kind of call it as I see it.
Yeah. Well,
that's interesting.
Yeah, I think it'd be a good discussion. Let's see what day we might do. I know Orlando was going to do something, and I have promised Simon that I'll do something. So maybe we'll figure it out. We'll figure out when it's going to be, and we will deal with it. But
Shukri, has he got a late note or what?
I beg your pardon?
I just said to Shukri, has he got a late note?
He's been having his space breakfast, doesn't he? And Powell says low interest rates until 2023. Absolutely right. So plenty of time to get rich. Yep. S&P cycle is today, and then the 22nd and the 24th. There you go. So it could be that we're looking at 3 more days, and we're still within that. But the DXY seasonal turn is in the middle of October. That's the big one, though, isn't it, Shukri? There is a little one in September as well. Okay. I'm going to send us to the moon. Quite possibly. The Earthlings have decided to tax me. Just get in your spaceship. Just get in your spaceship and lead them a merry dance. Okay, such dates suggest predetermination. That's scary. Do cycles apply this year? In some things they will, Crystal. In some things they will. In some things they won't. Because the thing is about the cycles, and you know, if we think about what makes cycles, what makes these seasonal cycles, you know, if you've got a crop, you know, any kind of crop, whether it be wheat, or if it's sugar, or if it's what else could we have? Corn, anything like this, they're all going to be subject to seasonal balances, you know, balances in the season depending on where they're grown. That we know when we get fruit from a shop, you know, the type of fruit that we're going to get is going to change. And if it doesn't, it's because somebody will go to a different supplier in a different part of the world, but the taste of it will change. So these are going to be subject to certain months of the year when they grow better. For whatever reason, and then you might have some certain times in the year when you get further pests and all that kind of thing. Now it's the same with currencies, because let's just take the yen for an example. Investors have certain targets that they need to meet. So if you've got you know, and really this is currencies, and that could be the JPY, it could be the dollar, it could be the pound. And this is the investors, and the investors will, you know, do certain things at certain times of the year. So that's why you do still get seasonal aspects when it comes down to currencies as well. So you know, they won't happen every year, because investors have to move when the market tells them to move, and we have to respect the fact that it's the market that tells us what we're gonna do, not us telling the market, well, it's a seasonal pattern this month, so I'm trading long. You know, feed me, because it won't do that, obviously, because there are many mitigating circumstances, and the world changes all the time too. You know, there is better technology, meaning that you know, crops can survive for many more months of the year and whatever else. So they
GM rubbish that'll kill us all.
Yeah, oh yeah, probably, mate, probably. I've missed quite a few of the US sessions. Have we taken off to the moon already? What is the S&P cycle? Okay, it's when there you go, Shukri's answer. That is when the S&P is due to go up or down based on a 30-year data. It's like the yen goes up in a month when Japanese companies. Yes, there you go. There you go. So that's exactly what Shukri's talking about right there, but I couldn't have explained it better myself, Shukri. Thank you very much, mate. Anyway, mate, that's pretty much me, and I guess it's pretty much you. I think it's been a good week, solid.
A couple of things, sorry.
Oh yeah, that's what I was.
You go if you
That's
need
what I.
to.
That's what I said. Pretty much you.
If the pound OCO triggers short, is a good idea to enter the same pair short with slingshot. So I know two different things entirely. So a slingshot setup is a slingshot setup, and a breakout is a breakout. So if you've got a slingshot setup, then you trade it, and that's it. Full stop. If you are trading the breakout, then you then have to think about what aggregated risk you're taking into that trade. So my answer is twofold. Trade the setup, but if it coincides with risk still in the market, then make sure that you're willing to accept that added risk. So that's the only way I can really answer that. There was another one on dollar Swiss. Have you got dollar Swissy chart, mate?
Or a dollar Swissy chart? Yeah. No, I can do you on the dollar Swissy, no problem. Dollar Swiss, where are you? There you are.
I can't remember the question now. I'm finding it, looking for it. Dollar Swissy, dollar Swissy. My God, I can't find it. I think it was, I can't remember who even asked the question. Maybe Sino. Can you see it? I can't.
What was it about the dollar Swissy, was it?
Dollar Swissy. And it was a little bit ago.
Let's have a look. About Euro CAD, pound Kiwi, junior nations, pound. That would have been quite a bit ago, I think. Jeff, I think there's a slingshot trade on the pound dollar. Oh yeah, we've done that one. Sign. Is it possible? Euro Aussie H1.
No, did that.
Did that.
Okay, well, let's just analyze this. There you go. Dollar Swissy for H1 for a long. So let's have a look at the H1 on dollar Swissy. I'm looking at my chart, and what I see on H1 is no trades at all. I haven't got a trade line. That's my issue. The only trade line I would have would come from, which is probably the one you've got, from the 8th or maybe even 8th of September on a 1 hour chart, going down to the 9th of September, next day. So both of those highs going through the market at the moment. So I guess that's where you're coming from. And same answer as before, which was have a look at how far the market's traveled already. Have a look at where the ATR is comfortable. So if it's comfortable at 170 pips, then 56 or 57 pips, which is what we've traveled so far today, isn't such a big deal. But you'll also see that DR2 is dead ahead. Now we've got a retracement, different story. You may look for a higher low in this area, round about the pivots. Should I be on my chart, Ash, or are you okay?
All right, mate. Sorry. You might be better off on your chart, but it's
Right. It's probably a good idea.
You can try and direct me.
It's probably easier on my chart. Yeah, okay. Because. Just because. Right. Yeah. So there's your trade line, right? That's the only trade line that's useful at the moment. Apart from, that's if you want to go long, it's the only one that's useful. If you want to go short, that one's going to be useful. So, like I was saying, we've already traveled 57 pips today, and I've got no idea what the ATR is on dollar Swissy, but let's find out. I wouldn't think it'd be too great because they tend to range a bit. There we go. 20-day ATR is 60 pips. So there you go. We're bang on it once again, bang on the ATR. So the one thing that has to happen before you enter the market is, don't want to do that, is retracement. And guess what we're getting? We're getting retracement. And somebody asked the question before, does that mean we go short when the ATR has been reached? Which in this case it has, and I can't remember the other pair, I can't remember the other pair, whatever it was. No, it doesn't. Sadly, if it was that easy, we'd all be squillionaires. But it doesn't mean you go short. What it means is you don't go long. That's what it means. Now, if you can find a way and a reason to go short, absolutely go short, but not just because we've reached the ATR, because it doesn't mean automatically that the market will turn around. What it does mean is it's highly risky to go further in that direction. That's what it means. So two things here. Dollar Swissy can't go long at that point. Can go long if you get a higher low, because we've got a nice base sitting here. If you get a higher low, that suits your brief, and that would be a candle maybe that looks like that, or that, or that. That'd be happy. I'd be more than willing to do that. There's the potential here for a retest of this broken trade line and the weekly pivot. That would also be interesting. It would also potentially create a higher low. So if this bar were to maybe sneak back a little bit and close maybe just above the weekly pivot or maybe on the weekly pivot, then I can totally see a long there. But you've got to take profit here. Got to. Absolutely suicide not to. So I hope that helps. That would be my analysis of dollar Swissy on H1. And now I'm done.
Brilliant stuff, mate. Okay. All right then. So we are back next week then, mate. We obviously will be here 1:30 UK
Holy snuff
time.
and duck shit. Yeah, it's Thursday.
Yeah. Yeah, it's been a decent week, and we've got some decent trades on. So hopefully they take off for us. I mean,
Yeah,
don't be surprised.
Yeah, could be.
Yeah.
Good.
Yeah. I'm quite happy with our work this week, mate. I think it's been pretty solid. So, not too many short-term trades, which I don't mind. I'm quite happy to kind of be a bit more relaxed about this kind of thing now.
Yeah, look, I'm totally not into short-term at the moment. I think the market is not conducive to it, and I'm more than happy to stay on H4 and D1 until that changes.
Yeah, I think that's fair. Okay, mate. Well, we'll be back next week. We'll be back in the UK show at 1:30. Before us, there will be Tea and Hot Sauce, I believe, will be at 1 o'clock UK time. I can never remember.
What 1:45. I'm not. It's 1:45, I think.
1:45. So if we are on at 1:30, that is in 4 hours. So that's 8:30 we're on. So 7:45 you'll get Tea and Hot Sauce, and then Jeff and I will. Yes, you're right. 7:45 till 8:15 will be Tea and Hot Sauce. Jeff and I will be back at 8:30, I believe, ready for the US Open at 9:30. But
and we'll have all the pound news under our belt at that stage, so it could be interesting.
Yes, absolutely. We have the pound news underway, and we might actually see some market movement. And of course, just a quick reminder to the mentorship students, there will be a session with Paul, Julian, and Ainsley on Sunday, free session, I believe. And they will be for the mentorship students. So I would turn up for that too. So have a great weekend, guys. If we don't see you again over the course of the next few hours, we'll be back, as we say, on Monday. Jeff and I in the house at 5 to 8.
That's a date. Don't be late. Have a great weekend, guys.